What's up, traders? Welcome back to another video. Welcome back to another instructional video, guys. In this video, we're going to be talking about order flow. All right, order flow is very important. Order flow is something that I use a lot in my trading. And I'm going to kind of just show you guys what order flow is, how to look at it, the proper way to trade order flow, and everything like that. So we're going to get straight into it. I'm not going to waste any time. First thing we want to do when we're talking about order flow, you want to draw your structure. What is your structure? Okay, when you look at structure is like this. For those of you that maybe you're new or whatever the case may be, this is how you draw structure, guys. Structure is gonna look like this. It's gonna be low, high, low, high, low, high. Okay, so you're gonna have your low, you're gonna have your high, you're gonna have your low, you're gonna have your high, and then you're gonna have your low, and then you're gonna have your high, right? This is not a low until this high is broken. Okay, so for another example, let's make it more complicated here. Let's say we have high. All right, let's draw the structure now. So we have this low that creates this high, right? This low here creates this high, all right? In order for us to have a new low, this high has to be broken. So what does that mean? This here does not break the high. This here does not break the high. So we want this high to get invalidated. Once this high gets invalidated, whatever low led to that invalidation, that's our low. So this whole thing is one structure leg. Okay, now going back to the downside. So we have low, we have high. So this is our high, now this is our low. Until one of these 2 points gets invalidated, we don't have a new structure. Okay, so that means now we have this low that creates this high. Now we see that we have this low that breaks this high. So now this is our new low, this is our new high, same thing. So this is our new low, and then this is our new high. Okay, do not get stuck in this internal price action here. I know a lot of people get stuck in it, and a lot of people will think like this is your structure, like this, and it's all over the place. You don't want to get caught in that. That's called a complex pullback. It's just complex structure. Stay between the legs. Okay, this is why we keep structure so simple. We look at the legs that breaks that high. Okay, we're looking at swing lows and swing high. We don't want to look at every single high or low. Okay, that's not how you want to do structure, because you're going to get caught, especially when we're talking about order flow. Okay, this is very important. Now, what we need to do on EU is find our structure. So our structure is going to be from here, this high to this low. So we know this market right now is bearish. So from this high to this low, that is our latest structure leg. How do we know that? Let me just zoom out a little bit. You guys can see we have right here, we'll start from this low, creates this high, this low, creates this high, this low, creates this high. We invalidate this low. So now we have a break of structure. And then we have this low here, which creates this high. Remember, not this high that breaks this low. So now our structure is from this high to this low. Okay. So the market, when you go down to like the 30-minute, you go down to the 15-minute, you're going to see other structure inside of that. That's called internal structure, which is what we're going to trade. That internal structure relates to the order flow. Okay, that internal structure relates to the order flow. Now, there's going to be a specific way that you want to trade that internal structure. I'm going to show you what to look for, how to trade it correctly. Okay, for my visual people out there, because I'm a visual learner, so I like to learn things visually. This is basically what it's going to look like. You're going to have internal structure that goes here. We have our legs, boom, and then inside of it is going to be your order flow. So you can see here, order flow is going up, order flow is bullish. You can see here, order flow is going down, order flow is bearish. Order flow is going up, order flow is bullish, order flow is going down, order flow is bearish, right? So you can see how order flow can change within the structure. This is why you actually want to know where you're at in the market. This is why I'm giving you guys this first prerequisite, because you actually want to know what direction the market is in, so you can understand how to trade order flow. When I do my structure, I draw my fibs out from this low to this high, okay? Why? So I know that at 50% is equilibrium. Anything at 50% is going to be discounted pricing. As this market is going higher, you're gonna follow the structure. You're gonna look for bullish demand zones, bullish demand zones. When the market breaks this low and you get this change of character and the market is selling to the downside, you know the market is looking to come back into discounted pricing, okay? So you can follow this bearish order flow until you get into discounted pricing. Once you get into discounted pricing, that's when you stop looking for supply zones. Because as the market is going down, if you guys don't know what supply and demand is, supply, you're looking for sales, demand, you're looking for buys. Okay, so you want to start looking for demand zones once we get into this kind of pricing to take the market back higher. Why are we anticipating the market to go higher? Because we want to follow structure. This is why we start off with the structure first, okay, to give you that direction so you don't get stuck inside of the internal price action. All right. And I'm going to show you guys what to look for and how to know when you're in bullish order flow and when you're in bearish order flow. And simply put, just to give you guys an example right here while we're drawing, before we get to the charts, when you're in bullish order flow, you're just basically going to see this. You're going to see as the market is going higher, it's going to form ranges, mostly during Asian session. It's going to manipulate those ranges like this, and the market's going to push higher. It's going to mitigate those ranges, and it's going to explode, right? Same thing here. When you're in bullish order flow, you're going to see the market create ranges. The next day, we're going to manipulate, and it's going to go higher. So in bullish order flow, you're looking for manipulations to the downside, okay? In bearish order flow, you're looking for manipulations to the upside. So if we know that our order flow is bullish, our setups, all we're going to be simply looking for is manipulations of liquidity, breaks of structure, right? With an impulsive move, with a gap. And then we're going to take trades off of those areas, taking the market higher, following the order flow and following the bullish structure. Okay, that's how you're going to trade it. It's going to be that simple. In a selling opportunity, if you're looking for sales in a bearish order flow or a bearish structure, right, you're going to see the market do this. It's going to manipulate highs and we're going to explode lower. We're going to manipulate highs and we're going to explode lower. Just like this, we're going to manipulate highs and we're going to explode lower. So these are the manipulations that you want to be trading. These are going to be your supply zones in this selling order flow, okay? And that's selling opportunity. So just to get to the charts real quick, and let's talk about this. Zooming into this price action, we have low to high, low to high, low to high. Remember, you can trade this bullish order flow, guys. You can trade it, all right? So boom, what happens? Let's see. Market breaks this low, right? The market breaks this low. I'm gonna go back a little bit more. Go back a little bit more to once we break the low. Boom. Gonna go to the 1 hour. You can see the market breaks this low. This is our change of character. All right, that is going to be our change of character of the bottom. When that happens, we're looking for bearish order flow. We're looking for bearish setups. We're gonna look for supply zones. How do you trade? What are you looking for? What is the setup? This is it, guys. Look at what's going on here. So you can see in this bullish order flow here, what happened? We are manipulating Asian lows, right? You can see London session manipulating Asian lows, exploding towards the upside. Manipulating Asian lows. This is the exact same example I was showing you guys earlier when I was drawing. We're going to manipulate lows and we're going to explode higher. We're going to manipulate lows. You guys can see here this last candle, manipulate lows, and we're going to explode higher. That's how you know we are in a bullish order flow. So when we're looking at a bearish order flow, we're going to look for the same thing. We're going to look for a manipulation of highs, explosions lower. So this is the setup you're going to look for, guys. Let me kind of just explain it to you. And you're going to look for this on a 1 hour time frame, and you're going to look for this 1 hour candles. Nothing under 30 minutes. You're looking for these candles and these impulsive movements to happen at least on the 30-minute time frame. Okay, prime time frame, my time frame that I like for these to happen on is the 1 hour time frame. Write these rules down because this is my A setup. This is what I look for. Manipulation of liquidity. You're gonna look for an impulsive move that breaks the high, leaving fair value gaps, imbalances. So here is a fair value gap here, and here's a fair value gap. There's a fair value gap. You're gonna take your trade off of the manipulation. Okay, boom. But you need to see the fair value gaps. The fair value gaps and the imbalances or inefficiencies, whatever you want to call it, is basically for us to see that the market actually wants to come down. Because you guys know that the market loves coming down and filling fair value gaps. They love coming down, filling imbalances, right? So when we see that, that lets them know that the market is going to actually come back for us and not just leave us. All right. That's why we want to see it. And also, the background behind fair value gaps and the background behind manipulations, after a manipulation, right, you want to see the impulsive moves that creates the fair value gaps. Why? Because it takes a lot of money for the market to create fair value gaps, to create imbalances. The nature of it is that there's so much buyers here that sellers did not get a chance to get into the market, and that's what we want to see. that gives us even more conviction knowing that, okay, there was buyers here. So when the market comes back down to this price point, that's what we're going, that's what our idea that we're going to trade, that there was previously buyers here that exploded this market from this point. We're going to want them to explode the market again, giving us that 1 to 2, 1 to 3, 1 to 4. Me personally, I only target a 1 to 3. So that's all I need the market to do is come to these areas and give me a 1 to 3. That's it, right? That is a bullish scenario. Here is a selling scenario. So this is a demand zone scenario, and this is a supply zone scenario. You're going to look for the market to come back, mitigate that area, and to continue lower, just like that, right? Filling imbalances, coming back like that. Honestly, guys, sometimes, I'm not going to lie, I've been through it. Sometimes the market won't pull all the way back, and that's okay. All right, that's okay. Look for the next trade, look for the next setup. All right, sometimes the market will come and fill this imbalance and go. If the market comes and fill that imbalance, this is still a valid opportunity. If the market gives you a deep retracement into like this imbalance, let's say it's like boom, and then it goes, all right. Most likely, I say most of the time, we're either not coming back into here or we're going to come back into here a later time. And by that time, the market structure has already shifted. By that time, order flow has already shifted. So it's important that you catch on to order flow quickly as possible, because you guys can see it. Order flow is not always going to stay in one direction. Okay. So you want to catch on as quickly as possible. We're going to play the market and we're going to see what happens. Okay. I'm going to play it on the 30-minute time frame. I'm going to slow it down and we're going to look for bearish order flow. All right, first thing we need to see, manipulation. All right, we need to see a manipulation of liquidity. We're looking for the highs to get manipulated. So in this case right here, Asian session is clear liquidity, right? These are Asian session highs. So what I want to see is this Asian session high get manipulated and then for us to break the low. This is the external low for us to break the low. All right, that's going to be our first setup. That's what we're going to look for. So you see, the market takes out Asian highs and you see that explosion. Look at these candles, explosion to the downside, right? This is exactly what you want to see. Manipulation of the highs, explosion to the downside. And I'm showing you guys this because I've traded this, okay? If you're in the Discord, you're going to see these setups that I've already sent, okay? So these are the setups that we're taking inside of Discord. And I send these for free, guys, right? I don't charge for any of this. These are just trades that I'm taking, and I like to share those trades with you guys. But I also like to teach you guys and to show you exactly why I'm looking for trades like this. So we have the manipulation here. This is our manipulation candle. Here is our imbalance. Right, here's our imbalance. So we have a manipulation, we have imbalance, and we have a break of the low. Break of the low. So we're simply going to take our trade off of the manipulation, right? Off of that candle, stop loss at the high. So entry there, stop loss at the high. Right there. And I'm targeting a 1 to 3. So that's going to be my target. Let the market play. Okay, so you guys can see the trade activated. Now, I want you guys to pay attention to this. Look at this up move right here. You see how we almost got stopped out of this up move? You cannot be scared, okay? If you're a new trader, do not close the trade. Let the market hit stop loss, right? It's very important because in my back testing sessions, I used to do this a lot. I used to see the market going towards my stop loss and I'm like, okay, let me close it real quick just in case so I lose a little bit more. That was the old me, right? That was like back then where I was making all those mistakes. Do not, I repeat, do not close your trade. Once you set your stop loss, you set your take profit, you set your entry, that's it. You can't touch the market no more. All right. Let the market hit the stop loss, because I've seen cases where in my back testing session, the market will go all the way like a pip away from stop loss and then completely go down and hit my TP. And then I have trades like that where I've closed the trade and I look back at it, I'm like, that was a winning trade and I missed it because I closed the trade, right? Let the market hit the stop loss. Do not do that yourself. That is psychology. That's the part of trading that separates the profitable traders from the unprofitable traders, okay? Let the market do its thing. Let the market move. So the market is moving and there is take profit. right? So, and I want you guys to pay attention to how this market moved because it gave us another setup. So I'm gonna delete this one here, and I'm gonna delete this here, and I'm gonna delete the imbalance so you guys can see it. Here's our next setup. What do you guys see? We have a manipulation of liquidity, right? You can see these Asian highs got manipulated. These Asian highs got manipulated. You can see the market moving towards the upside right here, right? That impulsive move that take out these highs. So that is going to be, I'll just draw this whole area. And I usually look for the area where the imbalance is at. So the imbalance is inside of this. So this is where it's going to be like this whole entire thing is the manipulation. Draw it like that. That whole entire thing is going to be the manipulation. I drew the wrong thing. There it is. So my next trade will come out of here. What do we see? We see a manipulation of Asian highs. We see an impulsive move, right? Look at these candles. Okay, these candles have to be violent, guys. All right, they have to be violent and you have to see an imbalance. Here's the imbalance. There's your imbalance. And here is the break. Break of market structure to the bottom, okay? And then you're gonna take your sell there. Your stop loss is gonna be at the high, and we're targeting a 1 to 3. That's what I'm targeting. If you target a 1 to 2, you're probably gonna get a lot more trades. I'm targeting 1 to 3. You can target a 1 to 3. You can target a 1 to 2. You can target a 1 to 4. As long as the minimum is gonna be a 1 to 2, at least 1 to 2. Okay. If you want to be a little bit more safer that way. Boom. Let's move this to the left a little bit. See the market activates the trade right here. Okay, we break the low. So now we are break even. Oh, we didn't break the low yet. Now we would be break even on our trade once we break the low. Market breaks the low. And it hits take profit, right? So now you might be asking, where's our next trade? Is this a trade right here? We took out Asian highs. And I'm gonna tell you guys why this is not a trade. We took out Asian highs, we took out liquidity, right? We took out these highs and we broke the low. That's good. Broke the low. What's the difference between these two and this one? Impulsive move, imbalance. We're on the 30-minute, guys. Look how weak these candles are to the downside. Look how much the market struggled to push lower. You see that we got the impulse right here. Now, if this area would have swept these highs and then we got the impulse, then we could have taken a trade from here. But since this impulsive move is after we already broke the low, we're not taking anything from up here because the impulsive move is not here, right? In this example here, you guys can see we have clear imbalance at the top. Where's our imbalance here? We don't see it. So that's not an impulsive move, okay? So in this case right here, we're missing a rule and we can't miss any rules. You need all the confluences before you take a trade, okay? So we don't have a clear impulsive move with imbalance, no trade. We'll let the market play a little bit. So I see we're getting small reactions out of it. Look what the market does. We invalidate this high. So remember, guys, we were talking about order flow. We have high to low, high to low, high to low. Now the market has created a change of character. Once we create the change of character, you can start looking for demand zones now, right? So we have a break right here. We have a change of character at the top. So now we start looking for demand zones. We're gonna look for the exact same criteria: liquidity to be taken out. Where do we see liquidity taken out? We see these lows, and all of these lows here have been taken out. Okay, we have liquidity taken out. Do we have an impulsive move? Yes, look at this impulsive move. So you guys now can see the difference between this impulsive move. Now you can see what a real impulsive move is. You see, this is an impulsive move versus this, right? It's a clear difference, okay? So we have an impulsive move that takes out a high. We create a change of character, and we have imbalance inside of this market. So how do you take this trade? When you're taking this trade, guys, you want to look for the deepest imbalance, okay? So boom, there's your deepest imbalance. This is where I'm expecting the market to come back into. So if you want to take a safe trade off of this, that's going to be where you take your trade. Stop loss at the low. Because you can see our manipulation all the way down here, right? This is our manipulation. Let me go see if I can find a clear candle in here for you guys as well. Let's go to like the 4-hour time frame. The 4 hours is a little big. So if you want to take a 4-hour candle, you can go ahead, but you can also make it a lot simpler by just trading the imbalance, okay? Trading the imbalance, or this right here, since this whole thing is the manipulation from this high all the way down, you want to kind of simplify it a little bit so you can take the trade off of the last imbalance here that is closest to the manipulation, okay? And the targeting 1 to 3. And then that's going to be your trade. Take profit. All right. Now let's delete this. So we see the market does what? We create an impulsive move, raise liquidity, takes out a high. Before this market breaks this high, we did it exactly again, the same setup, guys. You want to find something that you can replicate over and over and over again. Okay. So when we zoom into this move right here, we're looking for our next trade. Where's our next trade? Do we have a manipulation? Yes. Here's our manipulation, right? When we're in a bullish order flow, you're going to see the market manipulate lows and it's going to explode higher. Okay. So here's our manipulation of liquidity right here, right? Our manipulation has already been mitigated. As you can see, our manipulation already been mitigated by this area right here. Okay. So this is going to be our focal point for the future. Okay. So we have a manipulation, market mitigates that manipulation, and then we explode. And we create a break of the high. So we have a break of market structure up here. Break of market structure up here. Okay. We have our imbalances there. Imbalance that the market wants to come down and fill. Okay. So our next demand zone is going to be here. Next demand zone is going to be here. And remember, guys, this whole area was a demand. So even if, let's say you didn't want to take it off the imbalance, take it off to 50%. All right, just take it off 50% of the whole area. And you can see that still lines up with the imbalance. That's why we took the imbalance, because the 50% of this whole manipulation that take out all this liquidity already lined up with the imbalance. So that's where you're going to want to take a trade. So you can see at first it would have missed you, but you would have got tapped in again right here before the market took off. Okay. Delete that here. Here's going to be your next area. It's going to be your next demand zone, right? We already mitigated this tiny manipulation that took out these lows. And you can see this is the area that created the impulsive move. So this is the origin of the impulsive move. That's where we're going to take our trade from. All right. We have the manipulation. We have the impulse. We have imbalance. So stop loss is going to be at this low. And then you're going to target a 1 to 3. Well, I'm targeting 1 to 3. You can target a 1 to 2, 1 to 4, right? Now, heads up, 1 to 3 has been the best so far that I've seen. It's not too much, it's not too little. It's an easy target for the market to hit. Okay. But do your back test, of course, back test and see what's a consistent hit rate for you. For me, it was around like 1 to 2.5 consistently, like every single time. So 1 to 3 was a good area to do. Okay. So you can see this when the market went crazy because Trump is just walling out right now. But this trade activated kind of fast. I wasn't expecting this trade to activate when it did. Remember, guys, I was trading this whole thing. So that's why I'm kind of just showing you guys my thought process and how I was trading this. Okay. For those of you in the Discord, you guys were a part of these trades too. So, okay. Now we activated during Trump. We activated during Trump news with all the tariffs and everything like that was going on. See, this market explodes higher, right? And then, guys, this market exploded even way higher. So if I was holding this trade, I could have caught like a lot more, right? Could have caught like a 1 to 14, 1 to whatever. But I don't care about that, right? I'm here for a 1 to 3, okay? I'm here for a 1 to 3. Sometimes you're going to see the market explodes past your TP and gives you like these crazy RRs. That's what can happen from these demand zones, okay? That's why I'm saying, maybe you're going to target a 1 to 5, maybe a 1, I wouldn't go over a 1 to 5. I would stick to underneath 1 to 5, 1 to 5 being the max, just so you can get a consistent hit rate. You don't want the market to always give you a big move. You don't want to always expect a crazy move from the market. Things like this does not happen often, all right? So you just want to look for the consistent areas that you can take, consistent RRs that you know that you can hit, and let the market do its thing. So that's a simple breakdown of order flow, guys. I hope you guys loved the video. If you have any questions, any concerns, please let me know. Text me in the Discord, text me on Instagram, wherever is convenient for you. I will see you guys in the next one. Peace out. Thank you guys for joining.